how do you analyze a business or how much strength a business has? By asking few questions like what kind of product or service it is selling. So like we always talk about technology or even some other products like electrification is happening in terms of automobiles, right? So we know that any company which is only focusing on combustible engines wherein diesel and petrol is used have a big risk of obsolescence, right? But there are many businesses, or there are not many, but there are quite a few businesses where obsolescence is not a big risk, and travel and holiday is one of them, because we all know it is a behavior thing. If we don't go for a holiday for a year, we get a feeling that no, it is a necessity. I have to go. I have to plan something. So out of compulsion, we do plan. And in fact, vacation ownership in India has been sold by this concept only. I have spoken to many members of Club Mahindra. The one reason for them to join a vacation ownership was they trusted the Mahindra brand. The second one, and the most important one, was this, that they thought that we are really busy and we don't plan for our holidays. But with a membership, when we have paid for the membership and when we will be paying the annual subscription fee, we will make sure that we go for a holiday, right? We don't want that money to be wasted and we'll plan somehow. So that is how important holidays and vacations are for us, right? Second business model checklist is multiple source of revenue. So we now know that travel is not doing well. So obviously occupancy levels at the properties of Mahindra Holiday would be abysmally low at this juncture. Even the last year, from April till September, they had a very low occupancy. But from October onwards, they saw a very good occupancy level. But despite these problems, you will see their sales did not take that much hit which the market expected. Reason? Because they make most of their revenue from income from sale of vacation. And with the new accounting rule, we'll cover the accounting rule in detail in the subsequent slide. But let me just give you some idea about that. With the new accounting rule, what happens is, say if you bought 1 lakh, if you paid 1 lakh rupees for a membership of Club Mahindra, and company gets the cash 1 lakh today itself, right? But the company cannot book more than 4,000 rupees as revenue in this year, because as per the accounting rules, they have to spread this income over the next 25 years. So the same thing is happening for 254 customers of them. So every month they are booking the vacation ownership revenue. So even though the occupancy levels are low at this juncture, you will still get this large income stream going on. So that itself says that profit and loss account doesn't actually matter for this company, because they are receiving the cash upfront. What they do with that cash is more important than what is showing up in the P&L, right? So the multiple sources we have already discussed: the resort income, annual subscription fee, interest income on installment sales, and then the securitization. So let me just spend some time on securitization. So Mahindra Holiday today have more than around, I think around 1,200 crore as debtors. So what are those debtors? These are those debtors who have signed up their membership but have not paid the full amount. They have gone through this installment sales, right? So Mahindra Holiday, if they come up with a big acquisition plan and they need some cash, they can easily securitize these 1,200 crore of debtors with a bank, and get that money. So that is the advantage they have. And when they do that securitization, then also they make an income out of it. The third point is low customer concentration. Whenever we look at any business at Smart String Services, customer concentration risk is one of the most important risks we try to look at. Any company, any business which is at the mercy of, say, a handful of customers has a big risk, and we must be very careful before investing in them. But whenever your business is customer owned, is business where there is retail customer. So there is like in case of Club Mahindra, you see 254,000 customers are there, 254,000 customers. So then you know that your risk is somehow diversified, and you are not concentrated on a few customers, right? Then there is a low supplier concentration risk as well, because in case of Club Mahindra, the supplier is nothing, as in how do they supply their services? Through their resorts, and they are not focused on or dependent on just one resort. They have 70 resorts spread out of, say, for example, something right now, Gujarat, we are listening that there can be a cyclone. So maybe in an environment when there would have been no COVID, if Gujarat will face a cyclone, maybe the sales will get hit in case of Gujarat, but they have other states where they will have more occupancy, right? So that is the advantage of this business. Next slide, please. And high customer switching cost. This is a very important point, high customer switching cost. That point is basically you have already paid upfront membership for 25 years. And the contract clearly says that once you have been sold that membership, you cannot ask for a refund. And even in case of the policies, even in case of the EMI customers, the customers who have not been able to complete their EMI, they also cannot demand that the money to be paid back to them. There is no refund policy at all, and it is made clear at the time of selling the membership. Next slide, please. Now let's come to financial statements, and we'll look at all the important points here. Basically, so there are many. Sales and profits doesn't matter that much. You should not focus too much on the sales and profit. Of course, you should look at the expenses, how much they are spending on the operations. That is an important metric. But you should not look at revenues, and you should not look at profits, because it will keep on fluctuating due to many reasons. What is more important is how is the business, how is the balance sheet. So on the balance sheet, you see a lot of cash. You see no debt. Consolidated level, you see some debt. That debt is a part of, that debt has two parts. One is the loans they have raised in buying a Finland resort. That acquisition was done using foreign currency. So the loan was raised in foreign currency, which is only 3.5% interest. And the other part of the debt, which you see in the consolidated balance sheet, is lease liabilities. So we'll cover the lease liability and lease asset in the subsequent slide. But right now, just consider that the consolidated debt, which appears on screener or on balance sheet or on the reported numbers, these are not actual debts. As in, a part of it is actual debt, but that is low cost debt. So it is not a debt in India where you don't have any problem. As in, you have to pay a high interest rate, right? And again, we have gone through the multiple source of revenue. It shows up in the P&L statement. You can see the income from sale of vacation ownership and the other parts like resort income and annual subscription fee. what is pricing power? So pricing power, we will see that there is a strong evidence of pricing power, not in case of membership sold, but in case of how they charge the food and beverage in their resort, because uh, because you have captive customers, they cannot go anywhere else. That is where they get the benefit of charging a higher price. But it is not like you are doing something unethical. Many people think that it is being unethical, charging too much. Customers are also getting a lot of advantage, as in, if you go to a Club Mahindra resort, you will see the resort experience, you will see the hospitality, and you'll see the other activities beyond that, which makes it different from any hotel or any other resort. So you have to be in those kind of resort and then understand the power of this pricing, which they do in case of their food and beverages. And significant discretionary spending, which can be curtailed. And we've already seen an evidence of this during this pandemic. If you will look at the profit and loss statement of Mahindra Holidays, you will see from 1920, from the year 1920, if you compare the 2021 numbers, there is 15 to 20% reduction in all these expenses like sales commission, advertisement and publicity cost, marketing cost, customer acquisition cost. Customer acquisition cost reduced drastically because in the last 1 year, they didn't do anything physically. Everything was done on the digital media, right? And low debt repayments, low rate of interest leads to better operating cash flows, right? And ability to fund growth and capex with internal resources. So we have already covered that. They don't need to take on debt because they have 940 crore of excess cash visible, right? Next slide, please. I'm sure this person, Warren Buffett, needs no introduction. So I'll just straight away go to what he writes in many of his letters. So this is one of the quote which he has repeated quite a few times in his letters. So the best business, I'll read out this one because this is very important in explaining Mahindra Holidays model, right? So the best business to own is one that over an extended period can employ large amounts of incremental capital at very high rates of return. So that is very clear, right? Any business which can earn and also deploy employ large amount of whatever you can say, large amount of incremental capital at high rate of return, they are the best businesses. You have examples like Berkshire Hathaway, which has been incrementally investing for so many years in their insurance businesses, even though they had their list of failures, but somehow their businesses have done so well and they have been able to deploy large amount of capital, and that is where they have done well over the long term. Even though they, in the last few years or last decade, you can say that their performance is not as per their past performance. But the point is, if you have any business where there is a capacity to keep on redeploying new cash flows, those businesses are one of the best businesses to look at. A vacation ownership business is like that. Club Mahindra business is also like that, because we have the next slides covering that. The second point is, any company's level of profitability is determined by three items: what its asset earns, what its liabilities cost, and its utilization of leverage. So how our attractive float does affect the calculation of intrinsic value. When Berkshire's book value is calculated, the full amount of float is deducted as a liability. We'll cover the float part again when we'll cover MHRIL's business value calculation. But that's an incorrect way to look at float, which should instead be viewed as a revolving fund. So what happens in case of a float? Any businesses which is generating float, the float will appear in the liability side of the balance sheet as if it's a liability which you have to pay off. But there are many floats which are long and enduring, where you don't have to pay anything. Like in case of Berkshire, they say that we have a revolving fund. Like they they get a lot of premium from their insurance premium. They don't from their insurance business, but they don't have to pay out all what they have received from insurance premium. They have to pay a part of it, right? Similarly, in case of Club Mahindra, they receive the membership business, and that money is shown as a deferred revenue. It appears in the balance sheet, but that is not a liability. They don't have to pay that to the customer again, or they have to pay that to anyone else, right? So the cost